It's that time again, everyone. Welcome back to Crypto's News. It's me, Omar Bam, aka Crypto. Today is January 7th, 2023, and we are about to get into everything that's happened in crypto up to this point. It is Friday. Happy Friday. Thank God it's Friday, TGIF. It's been a really nice week in crypto, I think, and the news continues to come in. So I'm going to go ahead and share with you what I found today to be valuable. Always remember to dig a little bit deeper, look for the sources yourselves, and don't invest based off anything that you hear here. Also, if you would remember to hit that like button, subscribe if you're new to the show, and comment. That would be super helpful while we get things going here on the new Crypto's News channel. So, of course, a warm welcome to you, Marcel. Hope it's really nice over there in Vegas for you. It's actually probably pretty good weather right now in Vegas. Not too hot, I imagine, yet. So hopefully you're enjoying that. TT, Kevin Hawthorne, Dreamcatchers. Let's go ahead and start off with the prices. So you can see Bitcoin pretty much flat, just like what you're seeing with the stock market today, pretty much flat. Although it's been a really nice month up to this point. For Bitcoin, Bitcoin is up almost 40% for the year. You have Ethereum down 0.9% at $1,591.60. It hasn't been able to stay at $1,600, but it hasn't dropped much below that. I think all eyes are predominantly right now on Bitcoin, waiting to see what happens. As far as real major resistance, it's just north of $25,000. that you're going to be finding that. So there's probably some room for Bitcoin to continue to climb if it does a breach patch past 23,500 quite a bit further. So another thing that I wanted to point out, however, if you are trying to get in at a more advantageous time, perhaps, not that I necessarily know whether it's going to be the case, neither does anyone, but I will say that looking at Bitcoin's strength on the daily here, it is still really high and up there. You can see on the right here that the RSI is still well above the normal of, well, I would say the normal range of between 30 and 70. Right now, just over 80. So meaning that it might be quite overbought at this time. And most of the time in its history, it is not as high as this. So I wouldn't be too surprised to see it come down. Likely you'll see a lot of buying come in at that point. Some of the tentativeness that's going on with the prices right now perhaps have to do with this Fed meeting that's coming up next week. As I've mentioned before, however, it's expected that it's going to be a lowering of rate hikes from 50 basis points down to 25 basis points. You can see here again on the CME Fed Watch tool that is a 99.2% chance that they hike less, which would be a little bit more stimulative, I guess, or less restrictive rather, as had been happening previously with 75 basis point hikes and even 50 basis point hikes that we just saw. So you can see the next meeting is in 4 days. I think if Fed comes out and says they're going to, I don't know, somehow they get more hawkish, because it seems like they want to continue to play like they're like the tough guy a lot of the time at these meetings. I guess if their language comes out even tougher, that would be more negative for things like cryptocurrencies. But I'm not really sure how they would phrase that, but they're masters of linguistics. Some might argue, even more so at these meetings than economics, by trying to kind of lead people to a certain direction with what they expect, and therefore not drive markets in a frenzy. They really don't want to break things too much. At least that's what comes out of their mouths. But anyway, if it's something a little bit more dovish, a little bit more passive, that would be really good and could give a boost to the market. So I guess play that how you guys want to. Coming forward, as I've also pointed out, at the next meeting, you can see here 22nd of March, after the one coming up on the 1st, there is a chance that it goes up another 25 basis points, 82.1% chance of that. There's a 17.2% chance, so not nothing, that it actually just stays the same and they don't raise it. After that, it's pretty much expected that if they do raise it, these next 2 times, that it's going to be staying there, rate hikes. So no further rate hikes. So there's not going to be a meeting between the 22nd of March and May 3rd. So there's none in April. So that is going to be an interesting time for the markets, I would expect, trying to really gauge where things are going to be headed. It's really hard to kind of make bets this far out, I would say, into May. But right now it's betting that pretty much the rate hikes will stall out at this point. So that, again, something that would be quite bullish for cryptocurrencies as well as perhaps stocks. There is a head of research and strategy at Matrixport, and this person, Marcus Thielen, has told Cointelegraph that he believes that institutional investors are really what's driving some of this recent price movement that we're seeing. So how does he know that it's institutional players that are doing this and not just average retail folks? Well, it comes off of, according to him, the trading hours. So you look at when the US trading hours are open, because we know these financial institutions don't trade outside of normal trading hours, maybe some aftermarkets hours, but between those periods, there's pretty much less activity from them that goes on. So looking at Bitcoin being up about 40% this year, it looks like 35% of those returns occurred during US trading hours, likely pointing to the institutions being the big ones that are taking positions at this point. And 85% of the contribution is apparently from US-based investors. It also looks, he's talking about how sometimes when you see assets growing, it can be during Asian trading hours, but he seems to point to the fact that it's not Asian institutions that are driving price movements, but Asian retail that might be buying at that time. He looked at some other coins that have been up, although it's down a bit today. Aptos, for example, some of the developers from Facebook that were creating the DM blockchain are creating that one. Aptos, it was up quite a bit, but now it's letting up some. He points to how Aptos is seeing a strong mix of returns during US trading hours and during Asia trading hours. And I don't know, it seems like I'm hearing more from these institutional types. They're trying to pump this thing like they pumped Solana. So I guess Aptos will be a name to keep track of because it's coming up quite a bit here. But personally, it's not something I'm super focused on at this time. Let me know, are you guys into Aptos? Is it worth taking a look at a little further? Would be interesting to know. Tour Demisteer, so hardcore Bitcoin maximalist, wrote this on Twitter. All year, I drove past this crypto is real billboard. Since the summer, I've been telling my wife, the moment that billboard disappears, that'll be the end of the bear market, and it's now gone. And then he further wrote, the end of the Bitcoin bear market, that is. I'm not bullish on crypto. See, he's a Bitcoin maximalist, so he really only thinks Bitcoin is going to go up. I don't know if he really thinks that Bitcoin is only going to be going up, or he hopes that it's only Bitcoin that's going to be going up. Or it's more like a faith-based thing. That's why this Bitcoin maximalism thing is more of a religion oftentimes and grounded in reality, because I think the Bitcoin maximalists have been saying a lot of this kind of stuff, this drivel, for years, and unfortunately that other followers have missed out on some big gains where they could have had an opportunity to accrue more Bitcoin. That's what they wanted, or at least further their education on what is going on with cryptocurrency beyond just what Bitcoin has pioneered. Not to take anything away from Bitcoin, but I'm also not trying to take away from any other coins that are trying to do interesting things as well. But yeah, maybe this is another bullish thing. Let me know. This is based off this actually. So the White House has put this out. So you have a bunch of people in the White House. You have Brian Deese, the director of the National Economic Council, Arati Prabhakar, director of the White House Office of Science and Technology Policy, Cecilia Roos, who wrote this, chair of the Council of Economic Advisors, and another person who helped write this was the National Security Advisor, Jake Sullivan. They wrote that Congress should be expanding its regulatory powers to prevent misuses of customers' assets and to mitigate conflicts of interest, whatever the heck that means. So they basically talked about how many everyday investors, including young people, the young people, let's protect them. We care so much because we're the White House. And colored people, people of color, they have been hurt as well by crypto. No shit. Oh my God. So they need to be doing more, perhaps, to expand the regulatory powers that they have in order to protect the average person. They need to shape policy, because there's some good thing with blockchain, but they can't just let anything happen here, because they're going to point at things like what went on with this stable coin collapse, and they're going to laugh when they say stable coin. Terra Luna, which anybody who had looked at the white paper and dove into knew that it was basically destined to fail in some sort of depegging event, which could be very likely during a bear market and did in fact happen. So not much of a stable coin, but anyway, so pointing at that, the FTX fiasco, and using that as a way to expand regulatory power is exactly what they're doing here. They're trying to urge Biden, on behalf of Biden, to expand their reaches. They're talking about the same crap that they talk about when it comes to money laundering, to stop fraud, and still making some of these services available, and trying to make it seem like they really care about making adopting their good things cheaper and faster, but still making sure that they fall within whatever regulations that they want, and that they help shape the direction of different cryptocurrencies, which is weird to me, because you would think that shaping using research and development of technologies would apply only to central bank digital currencies. But to me, looking at some of this language, it actually seems that what they want to do is change even some of the way that certain cryptocurrencies that exist already operate to fall within their bounds, which to me is completely against decentralization, is against the very technology that underpins many of these different cryptocurrencies that already exist. So I don't know if they expect them natively to integrate some sort of technology, or they will outright ban certain cryptocurrencies they seem to be pointing to. So they have set up this request for information for digital assets research and development. They're asking for public participation as well, for folks, organizations, individuals, whatever, to put in comments in regards to how to better shape their digital asset research and development by March 3rd, 2023. And then I suppose they're going to be taking some of these ideas on how to hinder cryptocurrencies as they exist and going forward with whatever implementations this is, not just for a central bank digital currency, because that's actually very little of what is mentioned in here. But it seems like they're trying to apply this to all sorts of digital assets, including, of course, whatever CBDC might benefit the United States. And what's interesting as well is that they think it's a bad idea to allow for institutions or at least family pension funds, things like that, to get involved with cryptocurrencies, because this could eventually translate to bigger problems for the financial ecosystem at large outside of cryptocurrencies. And that because there have been limits to some of this investment and not a complete green light, this has been good and it needs to stay that way. So check out this paragraph right here. They wrote, while congressional action in these areas would be welcome, Congress could also make our jobs harder with potential legislation and worsen risks to investors into the financial system. Legislation should not greenlight mainstream institutions like pension funds to dive headlong into cryptocurrency markets. In the past year, traditional financial institutions' limited exposure to cryptocurrencies has prevented turmoil in cryptocurrencies from infecting the broader financial system. I actually think the broader financial system is what's infecting cryptocurrency, but it's neither here nor there. It would be a grave mistake to enact legislation that reverses course and deepens the ties between cryptocurrencies and the broader financial system. I don't know. I feel like people do need lifeboats from the broader financial system, although I do feel like there are issues when it comes to fraud. But a lot of the fraud that went on, for example, the biggest fraud here with FTX was just because of the politicians who were in bed with FTX and therefore made it seem reasonable because of the different institutions that did not do proper diligence. They just were like, oh, well, you vetted FTX, right? Well, I didn't vet FTX, but my friend, they vetted at FTX. So it must be good. FTX is cool because, you know, you have Republicans, Democrats all involved. Everyone has an FTX. It's got to be good, right? And that eventually led to all this contagion. And now, as I've said before, just said right now, I think it's because they were involved, DC, with FTX so deeply, people trusted it even more, which led to these problems. So anyway, it's more of the same kind of crap, but they're being a little bit more brazen here and saying that they don't want cryptocurrencies to be free, which is what they're all about, but rather they want to control the narrative of cryptocurrencies, and they're urging continued control of this under the guise of protection for people. It's kind of sickening. Hey, from Australia, Scott. Hopefully things are better for you out there with cryptocurrency in the direction you guys are going right now. Hey, what's going on, Renee? You guys are brothers, right? You guys are brothers. It's so funny. You run into each other here in the chat. I love it. So Charles Hoskinson, I forgot to mention this, but he has been wanting to buy Coindesk. Coindesk is apparently up for sale, the journalistic site that's been owned by DCG. He has expressed interest previously in owning it. This is something that's being criticized a lot. Charles Hoskinson is the founder of Cardano. He's the founder of IOHK, In and Out Hong Kong, and one of the early developers of Ethereum, one of the early creators of Ethereum. He's one of the top 5 founders of Ethereum, he's often called. But anyway, he is being criticized because he's trying to overhaul journalism. He's talking about in a recent video using Coindesk. Perhaps if he does get control of Coindesk, he's spoken about using prediction markets that can allow people to bet on a future outcome of an event or a piece of news or something like political event, a sporting event, whatever. But in this case, it would be perhaps news, whether something happened or not, linking that up with a journalistic site. So if journalists, they write some sort of article, they have to put some sort of monetary value on the article. And if it turns out to be false because of the prediction market, then they can lose out. And it's a way to move away from the way he believes journalism has moved, where it's all about money. It's not necessarily just about creating some objectivist truth about reality, and it's not about actually giving you reality. It's about making money however possible. And I think sometimes that does mean shaping what reality looks like in order to give some sort of linked institution a more profitable perception from the audience or something like that. But he thinks this kind of new idea or others that he's exploring could be useful to again try to tread down that path with Coindesk. So I think it would be interesting to see that. This is being criticized, as I said. There was an opinion piece where some dude said Hoskinson is a new cryptocurrency oligarch to replace Barry Silbert and some rich guy who thinks he'd bring a better legacy to the outlet, but whose ideas don't do anything to fundamentally fix journalism. Anyway, it would be interesting to see if he owns it. And I actually would prefer to see Charles Hoskinson, personally, that's my own opinion, try out his concept rather than continue to see Barry Silbert pump his own bags and shape his own narratives. But that's just me. So let me know what you guys think about that bit of news. Maybe you really don't like Charles Hoskinson, and so you think maybe he does conflagrate some things, and that would, in fact, be dangerous since CoinDesk is such a reputable source for information. I don't know. So this was something that I encountered today that was being shared. It looks like the news actually came out yesterday, but the California DMV, Department of Motor Vehicles, which is traditionally very slow, but it's not as slow as I saw in Florida, frankly, having lived in Miami and LA. But anyway, they're known for bureaucracy, according to this article on Fortune Crypto. And endless lines rather than technological transformation, but that may be about to change due to a collaboration with the DMV and the open source blockchain Tezos and Oxhead Alpha, a crypto-focused software development firm. Apparently, the DMV has been working with them since 2020 to explore how to put vehicle titles, for example, on the blockchain for transparency, for maybe trying to invite other states to onboard into the sort of blockchain system so you can transfer titles more easily between different states, because I think DMV is one of the institutions that most needs technological transformation. I suppose communication between the different agencies just to make it easier for folks, right? So I think this is a good example of how you can use NFTs. It's come out that they're going to be using basically NFTs to do this, non-fungible tokens, unique tokens, so that your title is a unique token, this title is a unique token. And it goes to show that NFTs are not just about art. You can also do things like titles, like with identity, that I think is important for this. If you're thinking this might be great for Solana, I'm not sure that it will be the case. It looks like they're creating a shadow ledger here, or a full replication of the state's title database on the blockchain within the next 3 months. But from my understanding, it might be not on the public blockchain, but I could be completely wrong there. It seems like it might be some sort of private blockchain that would exist here, maybe using Tezos-like technology, but still nice to see that that these kinds of ideas are still being explored. I think they should be happening on open systems. Like, why not Tezos? And it could also be Ethereum. I'm a little bit of a fanboy on that one, as you guys know. So might feel kind of bad for this person. What's up, Pete? Nice to see you here. They wrote, Tech Cricket wrote this on Twitter. Any tips for how to get this sorry-looking S9 ant miner, it's a Bitcoin miner, through airport security? Really worried they'll think it's a bomb. Yeah, I would not want to be the one trying to bring that through airport security for sure. But quick update, actually, he wrote, check the bag, and I'm sitting in the waiting area to board the plane. Zero issues at all up to this point. Cool, man. Cool, man. And I will leave you with this as we wrap up before our quote of the day. It looks like, according to Richard Hart, Hex might be headed up to 1 million.
For me to say that Hex will be $1 million a coin is very hard to say, because when you do the math, like the old world logic of like, oh, market cap matters. And then you're like, okay, 1 million times 640 million exceeds like the value of all of the stuff on the planet Earth in dollars. So it's very mind warping and very weird to say that you could see each hex be worth $1 million. It's really weird. But then I look at the chart, and the chart literally is pointed to $1 million. And this is with like a conservative line. For me to say that Hex will be $1 million a coin is very hard to say, because when you do the math,
I don't know, guys. Maybe I was wrong in not getting into Hex. Yeah, how do you pump something looking like you're pumping it? There's some sort of artistry going on here. I don't know. That's the real question here. As we wrap up for the week, it's been a crazy week. Please let me know down in the comments. Is Hex headed to $1 million a token? I know what I believe. Anyway, our quote of the day by Marie Curie: "Nothing in life is to be feared. It is only to be understood. Now is the time to understand more so that we may fear less." Love that. Take care, everyone. Much love. Thanks for joining me today, and stay cryptic. Peace.